Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. We had a lot of updates come out of China this week, with Evergrande getting a huge cash infusion, China's real estate starting to plummet, stemming from the Evergrande Crisis, and the US expressing more and more worries about what's going on in China and how it could spill over to the global economy. So what I want to do this week is go over Evergrande, of course. There was no eye-popping end-of-world major collapse payments due this week, but we still had a number of key stories that I think really give us an idea of what's going on with Evergrande and, more importantly, with Beijing. After that, I want to go over the real estate data that came out in China this week, as it looks like the Evergrande crisis is starting to spread and we are seeing the effects on the price of Chinese real estate. Ironically, we're seeing Chinese real estate plummet at a time when Canada's real estate is making record gains and US real estate is bracing for a massive influx of new buyers with lockdowns ending.
Hey, congratulations!
Finally, we're starting to hear more and more about the Evergrande crisis from top US officials. It started last week with the Fed, and this week there was a big interview with Treasury Secretary Janet Yellen, so I want to get into those details as well. We are going to have more updates out next week as more and more Canadian real estate data is being released as we are setting our own records. And we'll also have our China updates as this crisis continues to unfold. So make sure you click like and subscribe to get those updates. But for now, let's get into Evergrande. As we noted last week, Evergrande made its last-minute payment at the very end of its grace period, narrowly avoiding default. But again, the big question was, and always has been, where is the money coming from? China's leaders, for their part, have largely encouraged Evergrande's founder to make the payments himself and to inject cash himself, which, by the looks of the reports this week, he has sold a number of luxury items in order to generate more cash for Evergrande in order to make those payments. As any one of us would do, facing a $300 billion cash crunch, he sold his calligraphy, art, and some of his other luxury items, and was able to inject over $1 billion into Evergrande, which, while it will not at all fix the crisis, it definitely will stem the tide and buy Evergrande some time. Reuters actually interviewed one of Evergrande's debtors who was forced to sell his stuff because Evergrande owed him money, and he said that Evergrande's founder should be forced to sell his stuff, and that he's doing so because the Chinese authorities told him to. So I think this really gives us a good idea of what we talked about a few weeks ago, that when Beijing asks a question, it's really not a question. It's a directive. It's not a question. It's not optional.
It's moo.
No, it's not moo. It matters a great deal. Beijing is forcing the founder to pay these debts to keep Evergrande going for now, while I think Beijing is starting to get their hands more and more wrapped around this crisis and are going to ride this out and make sure that they manage this. One, to protect the 1.5 million homeowners that did purchase homes from Evergrande, but 2 and 3, to protect the bondholders, first onshore and then offshore bondholders. So we start to see even more and more and more as this crisis goes on that Beijing is getting more and more involved. And that's a good sign. They don't want to be seen bailing out the real estate industry, especially after they took a big stand with their 3 red lines. President Xi, the last thing he wants to be seen as being is weak. But at the same time, I think they know they have to manage this and manage it correctly in order to stop the spread. With that said, news came out this week and Chinese real estate data came out this week showing that Beijing might be a little late to the party and that time is running out for them to slow down this contagion. China saw the biggest slowdown in real estate sales since 2015, which is unfortunate since it's at a time when Chinese developers want to sell as many properties as possible. But unfortunately, Chinese buyers are reluctant to get into the market for obvious reasons. As a result, home sales fell nearly 23% in October, with 64 out of 70 cities seeing actual price drops on their real estate. This is fairly baffling to people in the West right now, as we've seen real estate just go up and up and up. But to give you an idea of the extent of this crisis, Chinese real estate is falling, not just slowing down, but falling. And that's not a good sign so soon after this Evergrande crisis really started, which, I mean, it's debatable, but we've really started hearing more and more about it in August. So 3 months later, and we're already seeing a slowdown to, as was reported this week and is predicted by Western banks like Goldman Sachs, it is predicted to slow down the Chinese economy to near 1990s level. Now, 1990s levels, that means they're going to slow down to about 5% growth. Now, those in the West, in Canada, in the United States, might think 5% growing economy, what's your problem? But it's just not what China is used to. China has seen almost nearly year after year 10% gains in its economic growth. So when China slows down to 5% economic growth year over year, that's a big deal. And that's just the predictions as of right now. This crisis is still unfolding. Evergrande, for its part, still has multiple payments due in December and a little over $3 billion in payments coming due by the end of March, by April. So we've seen them in the past few weeks and months struggle to pay a couple $100 million, which they still have more, a few $100 million coming due in December. But then they also have a few billion coming due in March or April. Obviously, I think we're still just at the tip. And the real estate data is already starting to show major slowdowns, and I don't think we've hit bottom yet. And I don't think the U.S. thinks we've hit bottom yet either. Last week, we talked about the Federal Reserve issuing a warning about the possibility that China's real estate crisis would spread to the global economy. And this week, Janet Yellen, the Treasury Secretary for the U.S., reiterated this point. In fact, she even expanded on it.
And a slowdown in China, of course, would have global consequences. China's economy is large, and if China's economy were to slow down more than expected, it certainly could have consequences for many countries that are linked to China through trade.
She was then asked if Chinese regulators had the power to keep their hands around this, to control this crisis, and her response was reassuring.
They're certainly trying to do that, and it's something we're watching closely.
Well, there's your ringing endorsement.
Given what was said last week by the Federal Reserve, and that this is now escalated to the Treasury Secretary coming out and speaking about the crisis, I think this is extremely significant. For U.S. leaders and Western leaders in general, so that includes Canada's leaders, when there's going to be a major issue that the everyday population needs to understand, because it's going to affect the everyday population, they don't just take the problem and drop it in our laps and explain everything all at once in one interview.
Here I am.
It's weird. Yeah.
That's not how they operate. What they do is they'll start coming out with mentioning it here and there in interviews, in the media. And then slowly but surely, the population gets educated about the impending crisis, if it's a crisis, or the impending issue of the day that the population is going to need to know about because it's affecting them. Case in point, transitory inflation. If you look at a Google search, that word never came up, ever, in Google search until very recently, because the population was going to need to know why the Fed, why the central banks were not raising rates in order to tamp down the inflation. So they needed to get the population ready, and it took a little bit for them to do so. So slowly but surely, we'd start to see our leaders talking about inflation, then transitory inflation, until everybody got an idea what it means. To be honest, I'm still not sure that the central banks know what it means.
Transitory to economists means sort of not permanent. Right. I think to a lot of people, transitory means it's going to be over quickly. And maybe, I don't know exactly what the right word is, but...
That's besides the point. This is their modus operandi. This is how they act when an issue is coming that is going to affect us all. So I think the fact that it was released by the Federal Reserve, who started to talk about it, and then a bit more of a higher profile person, Janet Yellen, began to talk about it publicly, shows that the U.S. is really getting more and more concerned about it, and we're going to start to see Evergrande become, and China's real estate become more and more of an issue in the front pages of our newspapers. I also think it's very significant that Biden and President Xi, had a 3-hour meeting at the beginning of this week, and it was never reported in the media if or when they discussed the real estate crisis. They talked about releasing oil reserves, they talked about arms deals, greater cooperation. They didn't really come to any agreement or anything, but nowhere in the media that I could find was it mentioned that they spoke about the real estate crisis. Given that the real estate crisis is putting China back to a growth rate similar to 1990, and the Treasury Secretary is saying that it could threaten the global economy and slow down our economy in the West, they talked about it. But it was never brought up, and I think that's very interesting that there was no mention of what was said about the impending real estate crisis. But obviously the US is getting more and more concerned, and they're starting to express their concerns in public, in the media, in the Federal Reserve reports. So I think they agree that this real estate crisis is spreading and could continue to spread throughout China, and that it does look as though there will be global repercussions, a global slowdown, a global effect from this real estate crisis. So we will have more updates out every week on the Friday for the weekly China update, as well as obviously our local data and any data that comes out on Canadian real estate and any change to the interest rates and anything fun. Thank you so much for watching, and have a great weekend.